Let me introduce Patrick Jacolenne. He's the founder of DATALOGIQ 360, which is a data strategist firm that's been shaping and driving the data space for more than 20 years. Patrick has really diverse experience, including real estate and finance and health tech, insurance and retail. And he's a really great resource for helping us understand some of the biggest data challenges we all face. So Patrick, the commercial real estate ecosystem is this giant trillion-dollar asset class. And the companies that seem to be making the biggest strides figure out how to leverage data to drive their decision-making. But this is really hard to do. So what are some of the most common issues with data management that makes this so tough?
The top three, I would say, challenges or issues that we see and encounter when engaging with multiple parties across the lending and commercial real estate ecosystem is number one, just consistency. There's a lack of consistency in the way that the data is sourced, managed, and then leveraged across those various entities and parties. And there's a lot of exchange from information that's originally digitized and being put on paper, then back to digitization as well. So that creates significant challenges for all of these parties that are a part of a single transaction to effectively manage that process. So that's number one, the consistency. The other is then timeliness of the data. So all of the various sources, 3,000 plus sources that could be a part of a single transaction, have varying degrees of freshness or timeliness of the data, which can also cause issues because that then can lead to consistency issues as well. So information that you're relying on to make an informed based decision around the valuation of the property, the market share, market economics, et cetera, can present challenges. And if that data isn't timely, you're making those decisions perhaps based off of stale data, 6, 12 months old. And we saw the net effect of that during the pandemic in the past 3 years. And then the third is just around general standardization. So the industry is trying to collect and make available publicly available data from third parties. But the challenge is moving forward, there's a big opportunity around standardizing proprietary data. That is the information that the lenders are sitting on, looking at historical information and how they marry it up with third-party data. Today, they rely on third-party data to be the authoritative source versus their own proprietary data being an authoritative source, and how they augment that with alternative sources that enrich and create greater insights that unlock then that ability to make decisions around what has, what is, or what will happen.
You know, the last couple of years have totally upended a lot of the models and underwriting philosophies on the investment side of the business, particularly with lenders. So if you had to pick, what would you consider to be the biggest hurdle for a commercial lender related to the way they interact with property data?
Yeah, I'd say over the past 3 years, as you mentioned, the pandemic and its related events have really had a knock-on effect for lenders. And part of that is really pushing towards digital transformation. But part of the challenge is many financial institutions continue to use manual lending processes that are overly complex, add a lot of cost to the transaction, and it also create a lot of unnecessary delays. And some of the data points that we've seen around this when we go in and survey some of our lenders and financial institutions is 35%, if not larger than 50%, are still relying on manual documentation, meaning handwritten documentation that they then have to transcribe into a digital source. And so that just creates a lot of unnecessary complexity. The pandemic, and traditionally how you would evaluate and assess a deal or a market opportunity, is look at historical trends and patterns. The reality is the pandemic was no historical trend or pattern. It was an anomaly. And so that is where this challenge of relying on manual processes and needing rapid, quick decisions and informed decisions to look at behaviors, trends, to study the market, and then determine how you need to kind of pivot and focus is that biggest challenge. So I would say, again, just to highlight what the pandemic really put a spotlight on is really the manual processes, the inconsistencies between those processes, and still the opportunity that's out there as far as market share to digitize.
And I hear a lot about the concepts of persistent IDs and connected data, but what's that all mean, and why is it so important to our industry?
In a nutshell, a persistent ID offers a opportunity to create a single source of truth for the data. So take 3,000 plus various aggregated data sets and being able to connect them with that unique ID. That creates a high degree of trust, confidence, and also then the ability to assess that data in a timely manner. Think of it as very much a social security number. Social security number gives us each a unique ID, but it also connects the relationship of us by first name, last name, address, perhaps previous addresses, relationships to other individuals, spouses, nieces, nephews. And so that then creates this collage, if you will, of data points that help inform us around who we are as an individual, creating that trust. And then also the benefit from having that persistent unique ID is one, there's a standardization. So imagine having a single property record that has the same look and feel based on that persistent ID. And there's no translation. You don't need a Rosetta Stone to be able to translate what I looked at yesterday versus what I'm looking at today, because the property records still have the same look and feel. The address could be very different in the profile of the property. But again, that standardization really helps, I think, us be able to evaluate and then understand the property itself. And then the ability to integrate and fuse multiple sources, as I mentioned, is one of the, I think, the primary advantages of having this persistent ID, both internal and external sources. And so, that can help then deliver an incomplete view of the property. Everyone I think is after, that's kind of the ultimate, I think, North Star is a complete view of the property. How can you get a 360-degree view, which then is complementary to all these various data points that are giving you primary characteristics about the property, but also secondary and tertiary that are giving you information around vacancy, rent, sales comparisons, tenants. So you imagine as you go out to those secondary, tertiary layers, you're seeing new insights that might drive opportunities around vacancy rates or property values or rent, et cetera there. And so that's where the persistent ID comes into play. And I think one of the ultimate challenges that commercial real estate deals with is the various types of data. And I think this is one aspect that is overlooked. And so you have your traditional commercial property data, which is the asset type, the location, the building size, the zoning, lot size, et cetera. Then you actually have transactional data. This is the data that helps analyze the past and present value of a property and its potential return on investment. And a lot of times that's what the lenders, brokers, and investors are using to analyze. Then you have your commercial loan and lender data. This type of data is really about the debt history, mortgage amounts, past and present debt, and then associated with its parcel and a property owner. And then you have the commercial tenant data. So it's information about current and past tenants as well and their lease expirations, et cetera. And then you have ownership data. So provides the information about past and present and owners of the actual property. And then you have the market data itself. So cost of the property on the market, reasons for investing in certain building amenities, types of returns, et cetera. So, I rattled off like no less than 6 varying different types of categories of commercial data. Now imagine trying to connect all of that data about a single property when it's spanning over 3,000 sources. Very difficult to do without a persistent ID. With a persistent ID, it creates that linkage and then the ability to be able to create those relationships across those various sources. And then to go back to the earlier point around what are the 3 factors that really affect and impact the commercial real estate market. When you think about 1, I mentioned, consistency, 2, standardization, and 3, timeliness. That's where persistent ID can really drive efficiencies and optimization in those areas to be able to unlock the data.
I'm always amazed with the number and complexity of data sources available these days for properties. But it seems like you need a PhD to really make sense of it all. What are some of the more common challenges you've seen with attempts at connecting property data?
I think it is market adoption. I think it's relatively easy to come up with a unique identifier and then a go-to-market strategy around that, but it's then the adoption rate. How do you saturate that unique identifier into the market so it becomes really the authoritative source and really create that dependencies between all of the various entities and parties involved in the transaction to leverage that ID. So the ID is being persistent across the actual transaction itself. And so there's some creative ways, and that can be around being the standard or being viewed as the standards organization as it relates to the ID, and really demonstrating the value that it unlocks. So it unlocks, the quality, the completeness, and the accuracy of a true complete property record. And so, that I think that is probably the single most challenging thing is then the adoption. And a lot of times what companies are trying to do now is do integrations. How do you integrate in the actual workflows where the point of decision is being made and leverage the ID there? So instead of passing bulk data back and forth between a transaction or an API, you're just passing the ID around. And then the ID is then just providing the data points that are necessary to be able to make that point of time decision.